It's Friday, you're watching FreightWaves Now, and this is the final episode of 2020. Thank you so much for tuning in and being a part of our process. We're going now with the bang. We have Andrew Cox with the DHL Supply Chain Pricing Power Index update. But first, we're going to go to Sultan himself, Zach Strickland, with Carrier Update brought to you by PowerFleet. Stay tuned.
Hello everyone and welcome to this Friday Carrier Update presented by PowerFleet. I'm Zach Strickland. So looking at our tender rejection index, we can see that it continues its momentous climb up towards the Christmas peak, if you will. 26.75, we're up 92 basis points or 0.92 percentage points from yesterday. That's probably going to continue through the next week or so, of course. Tender volumes, however, falling. Mike Vincent talked about this yesterday. Tender volumes coming down off of, what we consider a peak amount of freight coming off of Thanksgiving. Not unexpected. This happens every single year. We see volumes start to slide off. It's not just carriers and drivers that come off the road and take vacations. Shippers do as well as consignees and all of the moving parts of these logistics networks. So it is not uncommon to see volumes come down. It may not feel like it from a capacity standpoint, because there are a lot of drivers also coming off the road. And again, a lot of this freight has service requirements around it, elevated over that of standard, because you cannot be late with this freight if it does need to move. So a lot of elevation on the spot market. It's going to keep those rates high in certain markets, and certainly something that we don't anticipate is going to be done before the end of the year. So looking at our weighted rejection index, not all markets move the same. Capacity changes and fluctuates differently throughout the United States, and that's what the weighted rejection index is here for. I've got a couple of charts here to show you to illustrate what's going on in terms of market volatility. But the weighted rejection index combines tender rejection weekly change with market share value. So tender rejection rate increases in Atlanta, Los Angeles, or decreases have more weight than they do in Bismarck, North Dakota. We can see clearly here that Ontario, Los Angeles markets have had a decline in the tender rejection rate week over week, and a significant one at that, as they are, at the bottom of the list at a negative 9.5 on the weighted rejection index. But on the converse of that, we've got the Houston market with an 11.5 value with the weighted rejection index, indicating that this market is tightening rapidly and it does have a lot of volume to move with it. Other parts of the country, up in the Northeast, that Northeast sector is probably going to remain tight for a while now. We just had a big snowstorm up there, even though a lot of the highways are now clear, et cetera, and they're used to that type of activity. But any days lost, any hours lost do have an ongoing impact to capacity as they have to recover. And this time of year with the freight volume that's moving up there, especially some of that short haul freight up there around Allentown, Harrisburg, Pennsylvania, two huge DC-centric markets, still have a lot of freight to move. So those areas are certainly going to be some to watch, along with down here on the Gulf Coast around Houston. Looking at our market volatility map feature, you can see capacity generally moving up. This is tender rejection rate volatility, a lot of green on that map, indicating we're still, we're in that peak season tightness. It is surprising that Ontario is, and Southern California markets are continuing to show some of that decline. The biggest market in the United States, this is listed from the tallest to smallest markets in the United States: Ontario, Atlanta, Harrisburg, Los Angeles. You can see that both Los Angeles and Ontario showing moderate decreases in tender rejection rates. But then again, Houston market right here showing a strong increase, top 10 market showing a strong increase in tender rejection rates. Looking at the tender rejection index for van and reefer for the Houston market, reefer rejections shooting all the way up to 60%. Van rejection rates really coming off of a moderating drop after Thanksgiving. We are hovering right around the same level that we were before Thanksgiving, before Thanksgiving. Nothing as significant there as what we've seen in the past. So looking at Los Angeles, however, you can see there's a lot of freight coming in off the ports. If you look at that green line, volume staying high. Volume staying high on the rails as well. Volumes dropping for trucking. This could be an indication of things to come in 2021, as all of this freight has to go somewhere, and that port volume isn't going anywhere over the holidays, even as you take a vacation. So carriers, be ready for that starting 2021. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to the DHL Supply Chain Pricing Power Index Update. I'm here with the one and only Andrew Cox. Andrew, what's the latest?
Anthony, pricing power slipped 5 points this week from the carriers to the shippers. And, we have a lot of seasonal things happening right now. In a very unseasonal year, we've had a lot of disruptions and a lot of odd things happen, but we're seeing some of the same similar things that we see in previous years. So we've seen volumes retreating. They're down about 15% since Thanksgiving. That's quite a bit more than the previous 2 years, but again, they're coming off a much higher base. We also have we found a bottom with the outbound tender rejection index. It's up 2 percentage points off the bottom, but I do think rates have probably peaked. They probably peaked last week. So with all that said, we have a strong holiday season to finish through. But we'll take a look at volumes here. Like I said, we're down 15% since that Thanksgiving day. That's a significant drop. It's meaningful, but it's still at a very high level. Demand is still very high, so we're still strong year over year.
Got it. And so exactly, we see this downward movement, but still on a year-over-year basis, this is in a whole nother league altogether. And maybe we'll talk to this a little bit later on, not just seasonality, but also some of the impacts from the things that really boosted us up to this point of volumes. What does this really mean for, capacity still at this high right now, right? Yeah, we'll get into some of both the consumer side and the manufacturing side. But on the capacity side, like I said, we've boosted up 2 points off of a bottom. We had seen tender rejections had fallen since that Thanksgiving peak. But again, we've sent some pressure into that peak holiday, into Christmas Day and New Year's. We see that same thing typically seasonally. And this is just as bracketing occurs. Carriers are restricting their drivers to not get too far away from their domicile, or they're trying to get them loads back into their domicile so they can spend some time at home. That just puts extra capacity pressure, and with the already high level of demand, I think we'll probably retest those highs on OTRI nearing that Christmas Day. Got you. So you think we might be even able to hit some record highs, you think?
I think it's possible, just given that we were already at 28 last week, and that's when a lot of the drivers, some drivers had taken themselves off the market for Thanksgiving. Even more drivers do that when it comes to Christmas, excuse me. So I do think that we might retest that highs, but when it comes to rates, I think we may have peaked on rates. Just seasonally, rates typically peak in late November, early December. That got elongated a little bit this year. Like everything was stretched with the elongated holiday season and the increased demand. We saw that peak was just last week or the week before, but now we've taken a meaningful step down, and I don't think we'll retest those highs. We may see some upward pressure towards the end of the year, but a lot of that freight, as Zach was saying, it has time sensitivity right now, but coming next week, just after the holiday season, we're not going to see that same time sensitivity on the retail side of the freight, so I don't think we retest those highs.
So speaking of that retail side, that was one of the things that really provided a lot of volumes throughout the start of the year, and we started to see some of that come down a little bit, right?
Yeah, so take a look here. This is comparing retail sales for the entire country and the outbound tender volume index. Again, it's a loose correlation here. We think, we know about 70% of the economic growth is consumer facing or consumer spending, and we estimate that about 40 to 45% of all goods moved are consumer facing as well. So there is quite a bit of overlap there. But that's right. The consumer absolutely carried this economy through the mini recession that we had starting in March. We were able to spend more every month from March up until what we thought was November. We just got that November number, and that streak is now over. Not only did we decline from October to November, but they revised that October number down slightly, so it was a slight decline in October. The main point here is that if we want to reaccelerate this freight bull run, we want to keep this thing going. That stimulus package that they're seemingly nearing, we may have some more news on it today. That's going to be paramount to keeping this freight bull run going on the consumer side of things. On the other side of things is we have manufacturing. We actually have a Redwood manufacturing paper coming out today, so everybody go to FreightWaves.com and get that paper. It gives shippers outlook for 2021 and gives our expectations for domestic manufacturing production as well as foreign. We're going to need that domestic manufacturing to kind of prop up the retail spending when it starts to decline here in Q2, Q3, when people start to go on vacation, they start to go to concerts, they start to spend money on services like we typically do. I think we're going to need a little bit of support from the bottom, from that manufacturing sector. And the good thing is that we're seeing it. We've seen industrial production ramp up pretty quickly. We're still about 7% down from pre-COVID levels, but we have some strong comps in the early of 2021, and we have the ISM PMI. It slid a little bit, but again, it's in expansionary mode, so things are looking up for the manufacturing side in 2021.
A lot of momentum coming out, and you mentioned some of those projects that you've been working on. Any partnerships with that?
Yeah, so the Redwood manufacturing paper, you can go and check that out. You can go to FreightWaves.com. It'll be available to you there. You can download it for free. Just put it in your email.
Excellent. Andrew, thank you so much for all the insight throughout the year, and thank you so much for tuning in. That's going to wrap it up for this edition of the DHL Supply Chain Pricing Power Index Update. Thank you so much for tuning in. And that's going to do it for this Friday edition of FreightWaves Now and the final episode for 2020. Thank you so much for tuning in throughout the year and being a part of our program. As always, you can check out all of our content on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you next time.